Welcome to the Nifty Noon podcast. We are about to do a deep dive into what was a really fascinating and pretty intense week in the crypto space.
Yeah.
We're pulling all this from our newsletter, the Nifty Noon Daily Crypto Update, for the week of November 10th through the 14th, 2025. And it was a week where you just saw these massive institutional finance moves happening right alongside some really deep existential drama in the digital collectibles world.
It was kind of the perfect snapshot of the entire industry right now. It shows this clear split.
A split between what, exactly?
Well, on one side, you have NFTs, which are frankly struggling with these fundamental questions about IP and what a community really is. And then at the same exact time, you have the core crypto assets just full speed ahead, moving toward real financial maturity.
Driven by regulatory clarity and big money coming in.
Exactly. Institutional adoption. It's happening.
That's a great way to put it. We've got 4 big stories from that week that really tell that tale. So give us the quick TLDR. What are we about to unpack?
Okay, so first up, we have the Azuki NFT collection. Huge project. They tried to completely redefine their IP strategy, and it caused a lot of pain for their holders.
Right.
Second, we saw real regulatory progress that just opened the floodgates for money to come in, which all led up to a record-breaking ETF launch for XRP.
Okay.
Third, Coinbase made a huge play, a huge one. They're basically trying to create a regulated ICO 2.0 market in the U.S.
Oh, and finally,
a really high-profile corporate pivot. Winklevoss Capital backed a biotech firm that just completely switched gears to hold the privacy coin Zcash in its treasury.
that is a packed week. So our mission today is to walk through these chronologically one by one and really figure out what these shifts mean for you. Start with Monday, November 10th, and that big NFT challenge.
Let's do it. And it starts with Azuki. This is a collection that's, famous for its brand, its high prices, and its founder, Zagabond. He announced this major pivot. They're shifting to an IP-first brand.
An IP-first brand. Okay, so for anyone who isn't, living and breathing NFTs every day, what does that actually mean? Why is that such a big deal?
It means they're prioritizing a centralized brand, kind of like a traditional entertainment company, over the whole decentralized community idea.
So less about the holders having a say and more about the main company building.
Exactly, building a product for a global audience. The stated goal is to turn the NFTs themselves into first edition cultural artifacts. The analogy they used was a pristine first edition Pokemon Charizard card.
Ah, the holy grail of collectibles.
Right. So they announced a trading card game, then a manga, then an anime series, all aimed at a massive non-crypto audience. It's a play for, traditional commercial scale.
Okay, that sounds ambitious, but here's where it gets messy. This all happened while the Azuki floor price, the price of the actual NFTs, was cratering. It even fell below the original mint price. So if they're building the brand, why did the community react so negatively?
Well, it really all comes down to a huge conflict over incentives and trust. I mean, this project had already raised, 60 to maybe over $100 million directly from the community.
So they were well-funded.
Very. And when the team pointed to, disappearing royalties as the reason for this pivot, people just weren't buying it. Critics said, hold on, you used our money to build this company, and now you're letting our assets, the NFTs, just collapse in value.
So the holders felt like they went from being stakeholders, part of a community, to just being customers.
That's the perfect way to put it. The team's focus became maximizing the company's value, while the holders' focus was, of course, the NFT's value. And those two things just completely diverged. It raises this critical question for all of Web3, really.
Gotcha.
Can a digital collectible ever go mass market without, killing the decentralized soul that made it special in the first place? Azuki is now the big test case for that.
It's a huge test case. And what's so interesting is you look at our data from that Monday. Despite all that drama with Azuki, the rest of the market was fine. Bitcoin was up almost 4%, ETH up over 4%. The drama was totally contained.
Yeah, it was siloed.
Which let the other story, the institutional one, just keep rolling. So let's jump to that. Wednesday, November 12th, Coinbase drops a bombshell, a new token sales platform.
Yeah, this is a massive deal. I mean, fundamentally, this is the first time since the big ICO bubble and crackdown in 2017 and 2018, the first time that U.S. retail traders have a wide, regulated way to get into public token sales.
They've been completely locked out of those early-stage deals for years.
Totally locked out. And Coinbase is using its regulatory muscle to pry that door back open, but with some very, very strict guardrails this time.
And the first project is Monad, a big Layer 1 blockchain. So think back to the Wild West of the ICO days. The scams, the rug pulls. What is Coinbase doing differently? What makes this an ICO 2.0?
They've built it on three main pillars to restore trust. First is equitable distribution. So they're getting rid of that chaotic first-come, first-served model.
Which was always dominated by bots anyway.
Always. Instead, they use an algorithm. You submit a purchase request with USDC over a 1-week period, and the system allocates tokens fairly. No more gas wars, better access for actual people.
That's a huge improvement. But what about stopping the instant sell-offs, the flipping that killed so many projects?
That's where the other two pillars come in. Second, strict lockups. The project's founders and their insiders have to lock up their tokens for 6 months. No immediate dumping from the team.
Okay, that forces some long-term thinking.
Right. And the third piece is this anti-flipping mechanism, which is aimed squarely at speculators.
How does that work?
It's pretty clever. If you get an allocation and then you flip your tokens, meaning you sell them within 30 days, Coinbase can actually give you a much smaller allocation, or maybe none at all, in the next sale.
So they're rewarding conviction.
They're rewarding conviction and discouraging the kind of behavior that destabilizes new projects. The whole thing just sets a much higher standard for token launches in the U.S.
And on that very same day, we got more institutional news. The U.S. Treasury and the IRS issued new guidance for ETPs.
Yes, and that guidance gave crypto ETP, think of them like ETFs, a crystal clear runway to stake their digital assets. And this is the key part, to share the staking rewards with their investors.
Which opens up a whole new yield-generating product for retail, inside a regulated wrapper.
An entirely new revenue stream. You connect that with the Coinbase Launchpad, and you just see the institutional rails being built out in real time.
Okay, so that institutional momentum carries us to Thursday, November 13th. And this is where we saw a corporate strategy shift that was, well, it's pretty wild. A biotech firm on NASDAQ, Leap Therapeutics, just completely changed its identity.
This is one of the most interesting corporate treasury stories since MicroStrategy, went all in on Bitcoin. Leap Therapeutics, ticker LPTX, they rebranded completely. They're now Cypherpunk Technologies, Inc., ticker CYPH.
Wow. And the money for this pivot came from a pretty big name.
It did. The whole thing was powered by a private placement of almost $60 million led by Winklevoss Capital. Yeah. But here's the twist. They didn't buy Bitcoin. They didn't buy Ethereum.
They went for a privacy coin.
They went all in on Zcash, ZEC.
And they moved fast. The numbers in our newsletter were very specific.
Immediately. They took $50 million of that new cash and bought over 200,000 ZEC. Their public goal is to accumulate at least 5% of the entire Zcash supply. This isn't just a small bet. It's a huge strategic corporate position.
So let's unpack the why. Why Zcash? Why is a public company making a treasury bet on a privacy coin?
The new leadership framed it as a philosophical hedge. I mean, the whole cypherpunk movement is built on the idea that privacy, secured by cryptography, is essential for a free society. They basically said they see Zcash as digital privacy in asset form.
So not just a financial asset, but a tool for sovereignty.
Exactly. They see it as an essential hedge against a world with, increasing financial surveillance. And they made a point of saying their move was backed by value-aligned investors, not, quote, mercenary capital.
It's a decision rooted in the original crypto ethos. And that same day, Coinbase announced it was moving its incorporation to Texas, and Visa launched a pilot for stablecoin payouts. So you're seeing these geographic and philosophical lines being drawn.
You really are, between the regulated stablecoin world and the fiercely private asset world.
Which brings us perfectly to Friday, November 14th. The weekend's with a huge bang in the ETF space. A massive success story.
A blockbuster debut. Canary Capital's spot XRP ETF, which trades under the ticker XRPC, it launched on NASDAQ. And it pulled in an incredible $58 million in day one trading volume.
$58 million. That's a staggering number for any new ETF. Put that into perspective for us. How does that compare to other big launches this year?
It was the biggest ETF debut of the year. It beat almost 900 other launches across every sector. And crucially, it just barely edged out the previous record holder.
Which was the Solana ETF.
Exactly. Bitwise's spot Solana ETF, BSOL, which did about $57 million on its first day.
So XRP and Solana, two assets that have been through the regulatory ringer, are now the biggest ETF launches of the year.
It's incredible. The Bloomberg analyst Eric Balchunas even said that XRPC and BSOL are in a league of their own. It's just pure proof of how passionate and dedicated their communities are. When a regulated product finally becomes available, they show up in force.
And here's the kicker, the most important context. This record-breaking launch happened while the rest of the crypto market was in a free fall.
Yeah, that Friday, Bitcoin was down over 5%. ETH was down over 5.5%. The broader market was bleeding.
And the XRP ETF still pulled in $58 million. That just shows how conviction-driven these communities are. They don't care about short-term volatility. They're using the regulated on-ramp.
It really validates the thesis. So if we tie all these threads together from the week, you see this really clear split forming in the industry. On one side, you have the cultural side, the NFTs like Azuki, wrestling with these existential crises over what they are, which is pushing them back towards centralized corporate models.
And that's pushing away their original community.
Right. But on the other side, you have the core crypto assets, BTC, ETH, XRP, SOL, and they're finding enormous measurable success through these traditional financial products.
Because the regulatory clarity is finally there.
The clarity is there. The regulated launch pads are being built with real investor protections, and the ETFs are proving that the institutional trust is there, and it's unlocking billions.
So what does all this mean for you watching this space evolve? Here's a final thought to leave you with. If a huge player like Coinbase is moving to Texas, and a Winklevoss-backed company is making Zcash its primary treasury asset, are we seeing the start of a real split?
A geographic and philosophical one?
Yeah, a split between the institutional, regulated crypto world that's maybe settling in one part of the country, focusing on ETFs and stablecoins, and the original cypherpunk movement, prioritizing privacy, maybe finding a home somewhere else.
It's a huge question. It makes you wonder where the next wave of innovation, whether it's institutional or decentralized, is actually going to land.
We hope this deep dive into our newsletter provided the shortcuts and the analysis you needed this week. Thanks so much for joining us. If you found these daily updates helpful, please follow Nifty Noon on X and on Substack. That way you'll never miss a headline or the deep dive that comes after it. We'll catch you on the next one.